HRTS has 46 companies, which kind of surprised me, given that when we talk about companies that benefit from the weight loss drugs, we're usually talking about Novo Nordisk and Eli Lilly. So I didn't realize that the universe could be expanded to 46 companies.
So when we think about the obesity opportunity, basically the GLP-1 weight loss space, there's obviously two big players already, which have approved drugs in the US. But based on our research, there's a whole tail of companies that are in early or advanced stage of getting products approved. And in reality, that we're focused primarily on the GLP-1 weight loss space, but we also address second-order cardiometabolic obesity diseases. The trifecta of diabetes, obesity, and heart disease are very closely interrelated. So when we think about what the opportunity is, it's GLP-1 focused, but also capturing what are the impacts between the three different disease groups I just mentioned. That's why when we think about it, this is not taking a Mag 7 approach to weight loss drugs doesn't work. Rather, there's a lot of risk in biotech investing. You need to manage that risk. You need to reduce that risk. By having a more diversified portfolio and also using expertise, biotech expertise to manage that risk is really important for us.
And so when you take a look at the weightings right now, you have Vertex up in front, followed by Eli Lilly, then Amgen and Novo Nordisk. Is this supposed to be equally weighted and have these drifted? Or how did you decide to have Vertex, for example, as the highest weighting versus maybe some of the actual drug makers themselves?
So we don't want to follow consensus. We really look for out of the consensus views. So for example, we were a very early shareholder in Viking. And actually we sold when it spiked, it's since dropped 50%. We think that actually Vertex has some very interesting innovation doing on the diabetes side that may translate over into obesity. When we think about a company like Amgen, Amgen actually has a very interesting therapy they're developing that reduces the frequency of dosage. So when we think about the next stage of GLP-1 drug innovation, you're actually looking beyond GLP-1 drugs today. You're looking at amylin drugs. And for example, Zealand Pharmaceuticals in Scandinavia is one of the early leaders in an amylin drug, which really has lower side effects. So less nausea, less muscle loss. So for us, there's two big players in the room already, but the reality is we think that this is not going to be a two-horse race over time. And really being an early investor in some of those second, third horses is really important. And that's why we're looking at companies like Amgen, Regeneron, Vertex, Viking, to name a few.
So I want to go back to the ticker of your ETF. It's HRTS.
Yeah.
And I know you talked about the second and third order effects of weight loss drugs and companies that may be involved. Why not play off of something that's more directly tied to weight loss? I mean, it could be like GLP-1, or what was another ETF that liquidated that's tied?
Oh, Slim.
Slim.
Yeah.
Like Slim is available as well.
So if we were just marketing, we'd call it the GLP-1 ETF. But if you look at the innovation, it's actually looking already beyond GLP-1. So while GLP-1 is obviously the core ingredient behind a lot of the drugs we see today, we're trying to build a product that is not just trying to capture the interest of today, but actually is going to be here for the decade, or for decades, because we think this is ultimately a multi-decade opportunity. There's 1 billion obese people in the world. Novo Nordisk estimates that 2% of people are treated today. So when we're trying to build a product that is scientific based, is really based on expertise, and is not just trying to capture just GLP-1s. We capture GLP-1s, we capture weight loss drugs, but we also capture cardiometabolic diseases, which ultimately are at the heart of a lot of the obesity issues we see.
And I mean, going back to the way that you weight this portfolio and put it together, I hear what you're saying that you want to look beyond just the actual drug makers themselves, but that decision seems to be very, very active. That instead of just putting, the likes of Lilly and Novo Nordisk right at the top there, that you're actually looking beyond that and trying to pick out who will be the next winner instead of the currently established winner. I mean, is it harder to sell an ETF that is that active?
Yeah, so the reality is that in biotech, we believe you need active expertise. That active expertise is not to increase risk, but to manage risk. And that starts with having biotech expertise. So the person who manages ETF, he's a veteran 25-year biotech portfolio manager. The inventor of GLP-1 joined our scientific advisory board last month. And our view is that you need to manage risk. So when we think about Eli Lilly and Novo, they're the winners of today. But in drug discovery or in life sciences historically there's been a recurring trend of disruption with innovation. That's not to say that we're worried about what will happen with Novo and Eli, but we do think there's new approaches where Eli and Lilly may not be the first mover or the winner.
So the weight loss story is intact, and there's definitely a lot of fundamental tailwinds behind it. But there's a big issue here with supply and affordability. And we know that a lot of states and companies are limiting how much insurance companies will reimburse for those drugs. How does that factor into the portfolio manager's thinking about which companies he chooses?
So in our views, that's why you need to have a global approach. You can't have a domestic approach, which is why, for example, if you were to buy IBB or XLV, they don't own non-US companies. some of the innovations coming in the US, some of the innovations coming outside of the US. Affordability will improve as prices come down, but for these companies, the TAM is so big that even if prices come down, we still think it's going to be a very big opportunity, both in terms of improving patient lives, but also in terms of the commercial opportunity for these companies. So our expectation is that prices could come down. They could come down quite materially to $6,000 a year, which is a material discount from what we see today. But even at that level, when we do look at the opportunity side, we see 1 billion people,
right.
20% penetration, $6,000, that's $1 trillion market opportunity.